If you are a beginner and want to learn Elliott Wave, then this video is for you. In books and other social media platform, you will see Elliott Wave like this: 5 impulsive wave, then ABC corrective wave. But trading is different from visual like this. First, nobody use this line chart, and when trend is complete, anyone can tell you that these were 5 impulsive wave. But hardest thing for beginner is which make money for you to getting Elliott wave counting from the bottom to top. In real trading, market first make a bottom and which nobody believes. Then first impulsive wave start and which we call wave 1. Then after that a retracement start and we call this wave 2, and this wave 2 create confusion for everyone, buyer and seller at the same time. Then a new impulsive wave 3 start which goes above high of wave 1, and this give you first sign that there was a bottom at this area. Then a new wave start, again a retracement which we call wave 4, and after retracement a new impulsive wave, final wave 5 start which breaks high of wave 3 and a new high is made. And beginner do the mistake of selling this fourth wave price area. After this 5 wave are completed, a new ABC wave start from high of wave 5 which we call corrective wave A, then wave V and wave C. This is the first complete cycle of Elliott wave in a bullish trend. 5 impulsive wave, then 3 ABC corrective wave. What happened next after this bottom of wave C decide next trend of market. If it is a bullish trend, it break high of wave 5 and keep it bullish trend and keep making higher high higher low. Or if is a top at the high of wave 5, then after wave C price again make a retracement and break this low, retest and keep making new lower low, lower high, and entire trend reverse and it goes below bottom of wave 1. But everything depends what happened after this wave C, because from this bottom to this top, because this is our first complete Elliott wave cycle, but there are many rules which you need to understand to trade, and there are many rules, and one of the biggest important rule and which create confusion for beginner trader and which is necessary before you call that these are impulsive wave or corrective wave. The low of this wave 2 cannot go beyond starting of wave 1, it cannot even touch that level. It can make any retracement but cannot go beyond that level or at the beginning price. And same thing with fourth corrective wave. Fourth wave cannot retest high of wave 1 and it cannot go beyond low of wave 2. And if you see anywhere on social media platform wave counting of like this, that fourth wave is going below wave 2 or below high of wave 1, or even it retesting this high of wave 1, then this is the wrong. For a proper impulsive wave, there should be gap between high of wave 1 and low of fourth wave. This is the necessary. Otherwise, these will be correcting wave. And same thing with wave 2. There should be some gap between bottom beginning of wave 1 and low of wave 2. And another thing is price length. If you compare price length of all of this wave, then most important thing is price length of wave 3. This price length of wave 3 cannot be the shortest. In these three impulsive wave 1 can be longest, wave 5 can be longest, wave 3 can be longest, but the size of this wave 3 will always be bigger. This cannot be shortest wave compared to all of them. When you visually compare these three impulsive wave 1, 3 and 5, make sure 3 is longest. If you do this, that wave 1 is big in price length and wave 5 is also big, but wave 3 is short compared to both, then this is wrong. Wave 3 can never be the shortest wave. And if you are trading on shorter time frame like 15 minute, then you can simply call them 135 wave. But if you are trading on weekly time frame, then you compare them with 15 minute, then you have to subdivide this wave to lower degree, and this is called wave extension. First thing, all of these three wave can be extended into lower degree. You can do this with weekly and 15-minute time frame. With weekly simple 135 wave, you can subdivide on 15-minute time frame of lower degree. And next thing is, either all these three impulsive wave are further subdivided into lower degree, or there is a extension only in one wave. Like either wave 1 is extended subdivided into lower degree, and other wave 3 and 5 just normal, or wave 3 is subdivided and 1 and 5 just normal. And this is the most common thing, and this repeat most of the time, because for wave 3 to be long bigger than 1 and 5, it has to be extended, or there is simple extension only in wave 5. And if this happen, best thing about it, if you miss entire trend from bottom to top, but somehow you came late to trend and you got correct wave count for wave 5, and you got all the wave of lower degree, and you got the top of fifth wave, then you can sell right there and make some profit. But if you are doing your wave counting on 1 minute time frame, then you have no choice, you cannot go below 1 minute time frame. If you go like 1 second, then you will be alone. Either you trade 1 minute, or you go higher time frame, but you do not go below 1 minute. When this extension is complete, either in all three wave or in one, then next thing start correction from high of fifth wave. This is important. We have two choice after that. Either market make top at fifth wave and entire trend reverse, and it break the bottom and make new low, then this AVC wave retrace back and break this low, and slowly it goes back to bottom. This is the bearish trend. Or if it is a bullish trend, then this 5 wave converted into higher degree, and the bottom of this wave C we call this second corrective wave, and after that new impulsive wave start, which we call wave 3 of higher degree. This is same like if you divide wave 1 to sub wave on lower degree. This is never ending cycle, and you can start from 1 minute, and you can go up to weekly time frame, because on 1 minute time frame there can be $50 movement like in gold price. One on a weekly time frame in 2 or 3 week there can be $400 movement. And this is how impulsive wave from lower to higher degree unfold. So all of this was visual language, but there is a more thing. Somehow magically, there is a bottom here, and you buy, and there is a bottom, everything is confirmed from fundamental or some magical power, and you want to take another entry, then your second entry will be low of second wave retracement. But question is where this wave 2 will end. It can end anywhere between these two yellow support and resistance area, but to trade you need clear answer, a crystal clear number. For that we use fib retracement tool, and we draw from top to bottom of wave 1, and our first choice is 38% retracement, then 50, then 61, and these three are most common and popular fib ratio and which are explained in this book for Elliott wave. And same thing is with fourth wave. You draw fib retracement from top to bottom for wave 3 only, not the complete trend. And this is the difference between price action and Elliott wave, because price action trader will draw fib retracement from top to bottom, but for Elliott wave you will draw only from bottom of wave 3 to top. Then question come where the retracement of fourth wave will stop. As we already mentioned, fourth wave cannot go below high of wave 1, it cannot even touch it, otherwise they will become corrective wave above that level. And there is a between correction of wave 2 and 4. Take for example, wave 2 made a retracement of 61%, then wave 4 cannot make 61% retracement. And if wave 2 make a 38% retracement, then it cannot make 38% retracement in wave 4, because correction of wave 4 and 2 will be different in their nature and price length. If wave 2 retrace less only 38%, then wave 4 will retrace more up to 50% or 61. Or if wave 2 retrace more, then wave 4 has to retrace less. This is the price length difference. And next thing is correction pattern. If we talk about visual look of fourth wave and second wave, then there will be a big difference. Chart pattern which we call triangle correction and which has 5 ABCDE wave. If there is a chart pattern, then this will be only in fourth wave, it cannot happen in second wave if these are impulsive wave. And if that happen, that market goes up after bottom retrace and it made chart pattern, then whatever comes after breakout, these will be corrective wave, these cannot be impulsive. So chart pattern will only be in fourth wave, it cannot be in second wave, and which you tell in advance in future that fifth wave is coming or not. And second correction is zigzag flat which have three wave A, V, C, and this happen in wave 2. Either is flat or zigzag, it will happen in wave 2, but there cannot be a chart pattern. So we have price length difference and visual difference. And this is the reason you will see most of the time that price make a chart pattern, it made a breakout and it goes up, and after that entire trend reverse and it goes back to the bottom. Because this is the reason, if you got triangle correction of fourth wave, then next wave will be smaller and whole trend can reverse. But if it is a corrective wave, then it will not stop, it will keep going up. This is the complete pattern of impulsive wave cycle. First it make bottom which nobody believes, then goes up wave 1 retrace, which can be flat but never the chart pattern, and we get the wave 2 retracement by wave retracement tool. If it is a weekly time frame, then you buy on every retracement level, because on weekly time frame there will be big difference between every few retracement level. But if you are trading on 1 minute or 5 minute time frame, you can simply buy or put your SL near the bottom or beginning of wave 1, because according to rules it cannot go below beginning of wave 1, it cannot even touch. And then wave 3 start, which always break high of wave 1. Then again retracement. If there is a flat here, then you can expect a chart pattern. In fourth wave there can be chart pattern or zigzag or flat AVC correction both, but chart pattern cannot be in wave 2. And low of fourth wave cannot retest high of wave 1. It cannot even go below price territory of wave 2. And if you saw anywhere, if somebody is doing this, his fourth wave is testing the high of wave 1, then he is doing wrong. And retracement length of wave 2 and fourth will be difference visually and numerically. And final wave 5. So we got low of retracement wave 2 and 4 by retracement tool, but to get top of this impulsive wave we got extension tool, which we draw top to bottom and got extension. So if these are impulsive wave, then it will go beyond 100% projection. It can go up to 38 or 61. So if you buy at retracement, do not take profit, at least it goes up to 100. Then after it goes in 38 or 61 projection level, then you can expect a top of wave 3, then correction for fourth wave. And similarly we do this with fourth wave. And best thing about it, we know wave 3 cannot be shortest. So if you are selling fifth wave, then you know in advance that it cannot go up to 100% projection of wave 3. So if you are selling, then try to search for top below 100% projection. So using these two tools, retracement and extension, and all the rules which explain in books and they call them guideline, we got perfect entry exit from bottom to top. This was the for bullish trend and almost similar for bearish trend. Market made top, came down wave 1, then make retracement back, wave 2 came down again, wave 3 retrace back, fourth wave and came down again, fifth wave. And same rule for bullish and bearish trend. Wave 2 cannot go or retest high of wave 1, and wave 3 will definitely break low of wave 1 and a new low will be made. Then retracement fourth wave, which cannot retest low of wave 1 and it cannot go beyond high of wave 2. and final fifth wave which break low of wave 3 and where bottom is made. And if you compare bullish and bearish impulsive wave side by side, then most important thing which crash your account and you always do the mistake why this happen. These are five waves, but main thing is third impulsive wave, either in bearish trend or bullish trend. Wave 3 is most dangerous thing. In bullish trend, price go slowly. That is why we call long, and in bearish trend, it goes very fast. We call short. In bullish trend, third impulsive wave goes in almost vertical line or 45-degree angle. It does not care where the indicator is going. RSI is 90, 80 or overbought most of the time or oversold, which depend on trend. Wave 3 just complete its target more than 100% projection in both trend bullish or bearish. So before 100 projection you try to sell or buy an illusion of RSI indicator, you do the mistake. Wave 3 moves very fast. They do not care about indicator and they do not stop until your account crashes. And if you know these things in advance, then you can take entry and make profit. Or if you somehow got wrong entry, at least you can prepare, because this third impulsive wave on higher time frame like daily and weekly are most dangerous thing. Next thing is, let's say market make bottom here, made top, and next corrective wave start and wave 3, and you get a clear wave counting for sub wave of wave 3. The next thing is the corrective wave which start after end of wave 5, where they end. That's the important. The first target is low of fourth wave. This is the first target. If you get entry at the top, then your sale target is this. If price go below that level, then you can expect a trend reversal is coming and it can go back up to bottom. And if it goes below that, then next target is fourth wave of this third wave, which we call sub wave. In both cases there will be fourth wave or higher degree or lower degree. So these are your first and second target, and if price break that level also, fourth corrective wave, then chance of trend reversal increase. It can go below that bottom. But if is a belly trend and next level of impulsive wave is coming of higher degree, it has to be reversed from that level, because low of fourth wave, the sub wave of wave 3, is large support based on Elliott wave theory. But price action tell you different story. They call high as a support and resistance, but Elliott wave call support the retracement wave low. So this is the complete Elliott wave cycle: 5 impulsive wave, then 3 corrective wave from top to bottom, and I have explained you all the rules, and now I will give you practical example, real life example how to use this rule and trade. Let's take this recent example of gold price action from this bottom to this top. The first thing is to get this bottom where your wave counting start from wave 1. The question is how to get this bottom. To do this, you have to do wave counting for previous trend from this top to this bottom and from this bottom to this top. And if you have complete understanding of trend from this top near 2070 to bottom at 1786, then you know that next impulsive wave will be start from this price level. And now we will start from 15-minute time frame. Wave 1, then correction start. Wave 2, third impulsive wave which is bigger than wave 1 in price length, and anyone can tell this just simply looking at it. Then fourth corrective wave and final wave 5, and you can see wave 3 is not shortest, shorter wave is only 5. Then after that top is made and correction start. You draft a retracement, and after this top, which you know visually the 5 wave has complete, and by understanding of this complete trend from this top to this bottom, you already know in advance that if price is coming down, then this is just a retracement and more waves are coming. Then first choice is our 38% retracement, then 50, then 61. It depends on market, it can make bottom on any retracement level. And if you watch this video how to trade Fibonacci the complete guide, I have already explained you in detail how to choose the best retracement level to buy, because if you buy at 38 it hit your SL, then you try again at 50, hit your SL again, then try at 61 again, and your SL hit again third time, where you will buy. So everything is explained in detail how to eliminate all of this choice. So this 5 way complete 135 retracement start, and it made bottom between 50 and 61% retracement, and we call it AVC corrective wave. And where this corrective wave has made double bottom between 50 and 61% retracement, which is at the high of wave 1. So after that you can expect a new level of impulsive wave will come. Then next level of impulsive wave start, we call it wave 1, wave 2, 3, wave 4, and this wave 5. Because these were 5 impulsive wave, then retracement, and these are again 5 impulsive wave. So we will do wave counting of higher degree. To make a difference, we will change color on, will change numbering. So this set of 5 impulsive wave will become subwave for higher degree wave 1. After this correction, which end with double bottom, we call this corrective wave 2. When price break this high, this bottom, this retracement is complete, and you know this is not a chart pattern. So you can expect in advance. Then after this bottom, whatever comes is impulsive wave, not corrective. And third wave, you know, most dangerous thing. Either it can make you millionaire in one night or your account crashed. Because when they go up, they do not care where the indicator are going. And you can see the most popular RSI indicator overbought, and after that it did not stop, it keep going up. Overbought second time, third time, and it goes again 77 RSI, and after that it did not stop and make a new high. But this is the third impulsive wave. It does not care where indicator will go. It can stay overbought in bullish trend forever. But impulsive wave, third wave will not stop. Either it will make you millionaire or crash your entire account. So from this price action, from this chart pattern, we know this can be our expected third wave, and which is confirmed by these yellow 5 subwave 1 2 3 4 5. And after this top, this wave 3 correction start, which we call fourth wave. We know wave 2 cannot go below bottom of wave 1, it cannot even retest. Wave 3 break high of wave 1, a new high is made, and retracement level of wave 4 cannot retest high of wave 1. It cannot go below low of wave 2. And after is price was back at this high of wave 3, you can expect this was the fourth wave. And you can see retracement length of wave 2 is bigger and retracement length of wave 4 is shorter. And if you look clearly, then this look like a chart pattern. And these should be 5 corrective wave overlapping each other: A, B, C, D, then E. And if you got it, because this is 15-minute time frame and you do not get much time, you should be master in wave counting and pattern recognition, because next day this analysis, this chart pattern will be invalid. To trade again, you have to do wave counting again. And bottom of wave E, you take entry and you expect a new high will be made, and wave 5 goes slightly up the high of wave 3, and this is the top. Now visually you know 1 2 3 fourth corrective wave with chart pattern, and 5 has been complete, and you can expect a trend reversal. And if you buy here at the fifth wave, then you do the mistake, because after that there can be risk the market make top at fifth wave and goes back to bottom. Because in few minutes I will give you example like this. So after that, what you do, because understanding of this complete trend, you know that impulsive wave are not over, and more impulsive wave will come, and you wait for correction. You simply draft a retracement from bottom of wave 1 to high of wave 5. And all the choice from 38 to 61. It depend on market where it make bottom. But you wait for at least 38% retracement. And after this retracement, what happened? It made bottom at 50%, which only confirm in future when price goes up again. And you can see this bottom, which is made near 50%. It is also near the fourth subwave, the subwave or third wave. It made bottom at fourth wave of lower degree. It is confirmed by Elliott wave support method and fifth retracement level. Because with correct wave counting of subwave, you already know in advance that market will go at least fourth wave, and with retracement level you will think about buying at that level. Then after making bottom, price goes up again non-stop in almost vertical candle, break this high and came back again. What did this happen? Because it depend on understanding of this trend from this top to this bottom at 1786. You know impulsive wave are not over, more impulsive wave are coming, and this is correction for next level impulsive wave. And if these are corrective, there should be chart pattern, and it is not. If there is a impulsive wave, then wave 2 makes flat or zigzag correction, and it is a flat correction, and it tested 50%. And you can see w x y flat correction. And this is the difference between impulsive and corrective wave. Corrective wave can test high and low of previous wave, and they can even overlap each other. So now we will do subwave wave counting for this wxy correction. This is our top, it came down, and you know this is the fourth wave, it has not tested, and price is still trading above 50%. So you are expecting more downside is coming, and this happen. You connect these three high, and same with bottom, and visually you can see these are 5 ABCD corrective wave overlapping each other, and you know this is the corrective pattern. So next wave which will come after this will be corrective, not impulsive. And when you do a retracement from high of wave 5 to bottom where corrective wave ABC start, and now you will see the difference between price action and Elliott wave. Price action trader will saw this chart pattern, call it wedge, and they draw retracement from top to bottom. But for Elliott wave, you know these are corrective A, V, C, D, E wave, and bottom is here, and you will draw retracement up to this top to this bottom, and you can see it at all the retracement level 38, 50, 61, and 78, and you sell with SL and keep loss in your account, because all this is the choice, and I have explained in that video how to eliminate all of this choice. Because when this retracement level bar test, this was the last, you can sell, and for you already paid for SL 3 times and now you're trying fourth time. But as a Elliott wave, this is corrective wave ABCD and chart pattern has been ended, and this is the trend line. So this is the best choice to sell, and new low will be made. And if you somehow miss this top sale entry and this 7 to 8% retracement sale entry, you will wait for breakout, came again, retest this trend line. There are retracement again because new set of wave is started after top of wave E on this trend line, and you can see it made 61% retracement because it is testing trend line and making a retracement. And it made bottom at 50% retracement. And now because there is a B C pattern corrective wave and there is a chart pattern, so whatever comes after it is not impulsive, so no third wave, only corrective. So it made top and came back again AVC corrective wave retracement of 61, and it did not touch exact 61% retracement. And this is the reason the FOMO is created in mindset of all the trader, beginner or highest level, this does not matter, because market do sometime it goes above the retracement level, sometime almost touch or reverse before few dollar difference. Because this video is focused on impulsive wave, on corrective wave, there will be more video in detail. Now you will focus on flat correction, which is possible in wave 2, and it is sideways correction WXY, and we have this subwave. Flat correction has been ended and it made 50% retracement. Whatever will be come after this wave Y, the bottom of wave C, will be impulsive wave, and it will not stop. It does not care where indicator are going, and you can see where RSI went 80, it came down and still price is making sideways correction. So whether it is bullish trend or bearish trend, impulsive wave, third impulsive wave goes very fast in short period, and it almost goes in vertical line. You can see on 13-minute time frame all the candles were below, and you can see on H4 time frame in one candle it made bottom, retest top in just one candle. This is the difference between 1 and 5 impulsive wave and third. And now you can continue your wave count, go to higher degree, call it wave 1, then wave 2 WXY flat correction, then wave 3, 4 and 5, or it can be corrective wave, which you will get confirmation when price will go above that level. Because you can compare all the price action which will come after this resistance area and this sideways correction, and you have extension and retracement tool, and you also have sub wave. Because if you see, then this was the wave 1, 2, retracement wave 2 and wave 3, and you can compare the price length of wave 3 is bigger, a non-stop blue candle, and this is correction, and this will be fourth, and new high will be made, and this will be fifth wave, and correction after fifth wave will decide impulsive wave of higher degree, and it will be relative to this complete trend from 1786 to top near 1870, and then this bottom, because everything is relative. If you are new to this channel, then subscribe and watch this video, best book to learn Elliott wave trading, because this is the only book to learn Elliott wave. All the rules that I have explained you and all the pattern you visually saw comes from this book. And in this video I have explained you how to read where are this rule, and how to read this book, and how to make collection of these visual notes. Then you can see in Telegram channel on May 13 we updated that it is testing this trend line 1 2 3 4 5 5 time, and this happened when bottom is near, and there was a parallel channel, and we said explosion to upside is coming next week, and you can see bottom was made on May 16 on London Open on Monday, and this was the same trend line. Even if you did not get wave count for this complete trend top to bottom, and if you only get understanding of last or final wave, you can expect upcoming bullish trend or trend reversal. Then after that, when that bottom was made on May 16, then we share this parallel channel, a possible parallel channel, and you can see this image. The bottom was 1786 when next level of wave counting was start, and this was the possible chart pattern, and our first target was at least 38% retracement at 1895, and same trade plan updated on TradingView channel, and you have understanding of previous trend in this image, the wave W, wave X, then final wave Y, and triangle chart pattern correction in the middle of the trend, and this was the extension 61, and price made bottom there, because these are corrective wave, and if you know how corrective wave work and you have understanding of Elliott wave, then you know the bottom can be 1786, and you have mastery on your skill, then you can see future price action when there was nothing on chart. Then on May 17, when this lower degree 5 wave were completed and fifth wave made a top on 17 May, you can see I updated again on Telegram channel, and the difference in this image was only corrective wave were highlighted. You do not see impulsive wave in this image, only corrective wave. flat AVC and wave 2, AVCW, then wave X, wave Y, AVCDE triangle, and final wave E when top was made. So after that you can expect trend reversal or any type of Elliott wave which will come. Then June 1st, when this 5 wave were completed with complete understanding of subwave and this AVC corrective wave on June 1st updated again and almost there 50% retracement H4 and 15-minute time frame, because after that a new impulsive wave was started and it break previous high almost there. And if you are beginner, then majority of work for wave counting was already done on Telegram channel, and if you have at least average level of understanding, then you do not have to do everything by yourself. You getting a complete guidance for free. When fifth wave was ended, when this bottom where entire set of impulsive wave was starting and this bottom of wave W was made, everything is there. For beginner this is more than enough, because in past chart anyone can tell it, but real skill is tested on future price action. Last impulsive wave which started after CPI, and second quarter US GDP, because first is already negative, second will come on June 29, because US government say they obviously need to consecutive quarter negative data to officially declare recession. So in advance you already know that something will happen on June 29. And with this future information and these upside support and resistance, you already have some information from future. So next set of impulsive wave you can expect if may top fifth sub wave, then it can be near resistance, retrace back and goes up, then next impulsive wave will not stop until it break this high near 1875, and this is our daily support. So you already have so many information, and this line when GDP data will come, and if saying the top of fifth wave or end of ABCD triangle correction, then that big price action is coming. And if you see this post on Instagram, we did not mention lead wave, impulsive wave counting. We only mention this flat correction or double bottom and retracement. The real reason behind this post was you do not need to understand entire lead wave theory. First learning, then mastering, then it will take 5 years for you. But if you understand how this theory work or few part of it like flat correction of retracement, like what is special of third wave, then you can trade. And you can see the 5 impulsive wave pattern: the wave 1 retracement, wave 2 Wave 3 subdivided into yellow 5 wave chart pattern in wave 4, then a trace back, fourth wave, and last fifth impulsive wave at 1998, which was made before gold price collapsed to 1786. And we share it on Instagram, Telegram, and explain in detail. This is the top. If next bearish trend is coming, then start from here, and you can see on chart right now that top was made on fifth wave, and next wave break this bottom and keep making lower low, lower high. So if you only have understanding of last wave from 1960 to 1998, you can take entry, you can enter a big price section. You can see this Euro CHF example, the 5 impulsive wave 1, 2, 3, which made 38% projection, then ABCDE triangle in fourth wave, and you can sail this hammer, inverted hammer, on trend line on wave E, and then you know new low will be made, and you can write fifth wave. And if you are new here or missed our this previous videos, then do not forget to watch this video, best book to learn Elliott wave. Because if you do not watch this video, then you will do the mistake and waste your time taking screenshot, taking notes on paper, because everything is already there on book, and book is free. All the visual chart pattern, all the rules in one page. You do not even read the entire book, just cram one page. So these were impulsive wave, and I have explained you in details the rules and guidelines, how they work, how to trade. And in next video we will learn about corrective wave, what is special about them, how to trade them, because these corrective wave have different rule, and it is hard to trade them. But if you get correct wave counting, you can take entry, because sometime market you get clear trend impulsive wave, or sometime you will get correction. To make money in correction market, you will have to master corrective wave. You can see this was the correction, came down, up down, overlapping each other. These are corrective wave, and there was a big price section at that time, and when bottom was made, everyone missed the main entry, because they do not know where this corrective wave are ending. So in next video we will explain in detail about corrective wave, all type of corrective wave, like ABC flat correction, which are three, and zigzag correction, and ABCDE corrective wave, which we call chart pattern. Because impulsive wave have 2 and 4 corrective wave, and they have this choice, this can be three types of flat or zigzag, or fourth wave can have chart pattern. So complete mastery, you will have to master corrective wave, and in next video we will explain in detail, and do not forget to read that book.